All right, what up, traders? Coming at you for the market bias update report, Sunday, May 5th. Happy Cinco de Mayo to everybody. Diving right in, if we look at the S&P 500, zooming in a little bit here so we can see the overhead resistance levels that we are battling with currently. We have had some stabilization in price. We have had some stabilization in the Middle East, which has been great. We got Federal Reserve announcement for policy meeting last week, and that spurred some bullish momentum to end the week. That was great, but we are sitting right at an overhead resistance level of 51.73, both from horizontal support and resistance from the left of the chart over here, and also from the 50-period moving average that is right overhead. So what do we want to see to get involved here? I like the bullish move off the bottom. I like the slightly higher low that got put in, but I do not know if we are out of the woods quite yet. With the combination of the overhead resistance that we are dealing with, and if we drop this to a weekly chart, not particularly liking the look of our MACD and RSI secondary indicators rolling over here. I'm just not sure if this is the start of a breakout and this was just kind of consolidation at the lows before that happens, or if we are going to see a rollover. So my base case, if we zoom in a little bit further here, my base case is that this holds temporarily as resistance, that we do see start of the week selling, probably coming back down into our rising 9 and our decreasing 20 period moving average, somewhere right around 51.20. If we do get prices to come down to that level, we stabilize, and then we move higher and retest our overhead resistance at 51.73 and are able to break through it to the upside, I will like that trigger much, much better than if we power through right here after already moving off of about 50.34 all the way up to the current level, about 140 points. I would really, really like to see prices chill here for a little bit, either consolidate neutral for a couple of days and then break out, or pull back to this support level at 51.20 and then make its move higher. I would like that trigger much, much more. But if we drop out to the weekly chart, it is a little bit too early to tell to see if this is going to be just a bullish retracement into the 20-period moving average before moving higher and continuing our higher highs and higher lows as an uptrend, or if this is going to actually be our first lower high right here coming into the market and potentially another leg down. So not interested in a trade on this quite yet. Need more development. Basically, we need prices just to hold above 50.60. If it can stay above 5,060 and consolidate for a few days, again, the lean is to the upside. If we break 50.60 and get a close below that level, my base case would then be back down to about 48,000, or excuse me, 4,800, or 4750, somewhere right in that zone, 4750 to 4800. If we go out to the NASDAQ, basically rinse and repeat the exact same conversation we just had. Overhead resistance from 50-period moving average and horizontal resistance from the left of the chart. Still a little bit too early to tell. I like the consolidation and constructive nature of this the last couple of weeks, but it's still not out of the woods yet. So rinse and repeat the same S&P 500 conversation we just had. If we go out to the Russell, this one is better identified on a weekly chart. So it has been a long time that I've been talking about this giant consolidation range that we've had on the Russell for the better part of basically 2 years now. We did end up getting a higher low here after an attempt to break out that failed. We set a higher low, and then we broke and confirmed above and held above for a decent amount of time here on the weekly chart. So this did technically start us into a bullish uptrend on the Russell. However, we got a pullback that basically set just barely a higher low compared to the previous low here in this pivot. So there wasn't much increasing momentum to the upside there. And it is still too early to tell if this is kind of more consolidation in the same zone again, or if we are actually going to confirm higher. Going back to the daily chart, if we do get above this level and confirm above it, we might have a quick trade up to 2100 And then anything from 2100 up to the previous highs at 2160, 2167 in that zone will just be icing on the cake, but there will be potentially a trade here for about 50 points between 2050 and 2100s. Keep an eye on that level. We go out to Russell, no, excuse me, we were just at the Russell. If we go out to the Dow Jones, again, rinse and repeat, exact same conversation. Horizontal overhead resistance, 50-period moving average acting as resistance. If we drop this out to weekly, you'll notice it looks almost identical to the S&P. Still too early to tell, but I would love some consolidation and then a breakout. Again, if we just break out from here, I'm not super interested. I need to see some kind of development here and hope that this 20-period moving average at 38,690 currently holds as support. If it doesn't and that breaks, we are likely coming back down into the 37,000 to 36, let's say 300 level, somewhere right in there. Now, we go out to Bitcoin. Bitcoin had a really nice recovery on the weekly chart. Once again, we tested below the 9-period moving average significantly. We have reclaimed the 9 again on the weekly chart. But if we dive into the daily, we are still in a downtrend technically. We have gapped up over the weekend slightly and are above that initial downward trend line, which is constructive. But we are basically right at the 200-period moving, the 20-period moving average, and we have the 50-period moving average directly above us acting as resistance. Ideal world here, I actually still would love to see another downward leg. That might sound counterintuitive because I did put that video months ago now, probably 2 or 3 months ago now, that I was very constructive and bullish on Bitcoin way back here. We got that move, and now we are in kind of this sideways volatile chop at the top end of the chart. I personally would absolutely love to see prices come back down to the $53,000, $54,000 level, give us some stability down here, consolidate, and then break this trend line again, but at much lower levels to establish a longer term position in this once again. So that is my hopeful analysis. On the daily chart, we might not get that cooperation, but this has been a too quick, too fast move higher into a lot of resistance that we have overhead, really until we get back above about 66,000. If we reclaim the 50-period moving average as support, then I will be interested in more bullish action. Until that happens, I am hoping for more downward pressure to be able to buy more long-term down around 54,000. Going out to crude light. Man, crude just all of a sudden has been absolutely killed the last few weeks here. It is not a great look. We have now officially confirmed not only below the 50, but also below the 200-period moving average. We have broken down below our support level here at around 79.60. This needs some significant development. If we get back above this trend line and back above the 50-period moving average, currently around $82, that will be our signal to the upside. But until that happens, there is significant pressure on crude light, and it's kind of a stay away for me right now. Going out to gold. Gold continuing to consolidate. I had kind of called the absolute top on this to almost the penny and said we had just run way too hot and heavy into this and that it needed to chill out for a while. We are finally getting that chill. Basically need to reclaim the 20-period moving average currently at 23.53 to resume to the upside, or need to work lower into the chart and let some more of this volatility settle itself out. I would love a dip back down into the rising 50 that's currently around 22.50. If we get a price pullback to continue down into that zone, give us some sideways neutral action for a few days, and then a trigger higher, I will really like an add on gold. But until then, it's kind of in no man's land. Not super interested this week. Going out to our metals real quick. Let's hit palladium. Palladium had a potential to reclaim its 200-period moving average here. Tested it kind of once, tested it almost to the penny the second time, and then just broke down in the market volatility, and it's kind of ugly now. We toss this to a weekly chart. You can see we are still below all of our moving averages on the weekly chart, and we are actually starting to accelerate to the downside again. We are in a zone where buyers have stepped back in a lot over the last few weeks and few months, basically to start this year. So I wouldn't be surprised to see us push back up and work back into just shy of 990, back into these moving averages, but it has a lot of work to do until I'm going to be actually constructively bullish on palladium. We go out to platinum. It doesn't look as bad. It actually reclaimed its 50 and 200 period moving averages. That's great. But it's just a little bit too volatile and choppy to do a lot with right now. I would like to see this kind of go neutral, go sideways for a little while, clean this up, and give us a trigger higher. But again, a little bit too early to tell. Finally, let's go out to UUP. And on Friday, we actually got a gap down, breaking below the 2870 level that had been holding as support through all this consolidation. That is very constructive for the market. And honestly, I like to see the US dollar breaking down here because that is supportive for equities markets. If we get continued pressure to the downside in the dollar, that will support the S&P 500 and NASDAQ and all the other indexes breaking out. So I would kind of like to see this do a little low base, go sideways for a day or two, and then retest the 50 down here around 2840, and then start to move higher once again. That's kind of what I would ideally like to see for the week ahead, because if we got that neutral trend on UUP, that would be very supportive of the constructive kind of going neutral sideways here on the S&P 500, and then the breakdown in the US dollar would support that move higher in the equities market. So that's kind of the ideal scenario in my mind right now. If we go out, again, just look at our economic data briefly. Basically a very, very light week. Unemployment claims on Thursday, 30-year bond auction on Thursday, and preliminary consumer sentiment report on Friday. Consumer sentiment hasn't been playing a huge role in moving the market, so really it's going to be all eyes on unemployment and bonds this week. And then if we go out and look at our heat map, looking at earnings, you can see all of the green on here, green, blue, teal, whatever you want to call it. Those are all companies that have already reported. So relatively few important companies coming out left in the way of a bullish uptrend continuing. We kind of have a pretty good idea of what earnings is this season now. So that is great. And will let us have a little bit more technical of a conversation coming in through this week that might support that neutral development and then breakout. Finally, it's been a couple of weeks since I've updated on profit and loss stuff. Like I said, in the last 2 weeks, I have been de-risking my portfolio a little bit just in case this does find resistance and rolls back over. So I did take some profits on longer term positions that I had held for a little bit since 2023. So over the last like 4 or 5 months or so, did lock in about $8,170 on stock trading. And then on futures, ended up having a nice size loss of 6,600 to start the week, and then clawed that back over the course of the week here. And you can see the total of all of those ended up being 1,570 for the futures. So combining that with the stock trading, just shy of a $10,000 week. But trying to continue to be cautious, and most of that gain was simply from locking in longer term position trades and a little bit less on the actual short term trading this week. So anyways, hope that helps, guys. Enjoy the rest of your trading week. Let me know if you have any questions. And if you like this content, please like, share, subscribe. Really helps me out. And if you want to learn how to trade the financial markets like I do, and you like the style of trading that I have just recently launched a 16-week course teaching people how to trade the financial markets and teaching you to do the same that I do. So if that is interesting to you, hit me up, let me know, and I would be more than happy to share a little bit more information. I will drop a link to that course in the description of the video for anyone who wants to check that out. Till next time, guys, take care.